Foreclosure activity continues to increase, according to the Realty Track numbers that were released recently. We ended the first 6 months of the year with over 1.65 million U.S. households receiving a foreclosure notice. That was down about 5% from the previous 6 months, but up 8% from a year ago, and puts us on pace to set a new record for foreclosure activity at the end of the year. In all likelihood, between 3 and 3.2 million U.S. households will receive a foreclosure notice this year, up from last year's record of 2.8 million households, and a clear sign that the foreclosure crisis has not yet ended. More problematic is the number of bank repossessions taking place. Over 529,000 bank repossessions took place in the first 6 months, and over 269,000 in the second quarter alone, which was a 38% increase from the previous year's second quarter. These are very troubling numbers and indicate that the housing market still has a long ways to go before it recovers. We'll also set a new record for bank repossessions by the end of the year, with somewhere between 1 and 1.2 million homes being repossessed by the banks. The June news wasn't all bad. 314,000 U.S. households received a foreclosure notice. That was down marginally from the previous month and also down a little bit from last year's June numbers. But it also represented the 16th consecutive month where over 300,000 U.S. households received a foreclosure notice, a record that's simply unprecedented in the history of the housing market. So clearly we're not out of the woods yet, and we don't want to read too much into these marginal month-over-month decreases that have occurred since we peaked in March with over 367,000 households receiving a foreclosure notice. What's happening isn't because underlying conditions have improved. We're still seeing high levels of unemployment driving high levels of foreclosure activity. We're still seeing economic displacement forcing other people into foreclosure. And we're about to see the third wave of this particular foreclosure cycle hit, when hundreds of millions of dollars of adjustable rate loans, Alt-A loans, and option arms begin to reset in large numbers for the next 12 months. The foreclosure problems are most severe in a handful of states. Nevada, Arizona, Florida, and California had the highest rates of foreclosure activity. And California, Arizona, Florida, and Illinois had the highest numbers of foreclosure activity. Perhaps not surprisingly, 28 of the 34 highest metropolitan areas in terms of foreclosure activity were from the states of California, Nevada, Florida, and Arizona. The first of the highest ranking MSAs outside of those areas was Boise at number 22. A year ago, we wouldn't have been talking about Boise, Idaho, or Provo, Utah, or Fayetteville, Arkansas, or Joliet, Illinois as being foreclosure hotspots. These are not places that had exorbitant home price increases and really bad lending practices exacerbating the problem. These are places where people simply lost their jobs. So the problem isn't bad loans, the problem is a lack of a paycheck. Among the metropolitan areas with the highest rates of foreclosure were primarily cities in California, Nevada, Florida, and Arizona. Las Vegas headed the list up. Almost 7% of housing units in Las Vegas are in some stage of foreclosure. California cities included places like Vallejo, Stockton, Merced, Riverside, San Bernardino. Phoenix made the list from the state of Arizona, and Florida had places like Cape Coral, Miami, and Orlando. So the problem is spreading, and similarly it's still concentrated in the states that have been hardest hit since the beginning of this foreclosure epidemic. And it's very likely we haven't seen the peak yet in terms of overall numbers.